Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to U.S. Markets Wrap with me, Ryan Huang. Let's take a look at the latest session on Wall Street. And we've got a bit of green on the screen. The S&P 500 just within a whisker of a new record, up 0.8% in the latest session to close at 6,141. So its gains for the week so far up 2.9%, just a few points away from the intraday all-time high, which it hit in late February. The Nasdaq Composite up nearly 1%, itself also inches away from a new record. The Dow Jones Industrial Average climbed over 400 points or 0.9% to 43,386. So it looks like some risk-on sentiment is in the picture as we check in with Ben Emons. He is the Chief Investment Officer for FedWatch Advisors. Ben, thanks for joining us on the show today. How are you doing?
Good morning, Ryan. I'm great. How are you?
I'm doing good as well. Always great having you on the show, Ben. Let's take a look at what's playing out this week. We've got a lot of things on the table to worry about. In this case, you've got Middle East tensions. You've got the tariffs coming soon. But despite all that, it looks like markets are pushing up higher. What do you take away from what's going on here?
Well, there's a few things happening. I mean, we obviously had really good earnings out from one of the other semiconductor companies. And that really triggered the sentiment in the market because it's the semiconductors that have been outperforming since we sort of started to de-escalate the trade war, the tension with China, which was somewhere around middle of May. And it's really been an underlying drive of the market because it's the semiconductors that have been in the eye of the storm, if I call it, right, in terms of the trade tension about the export chips restriction against China reversing the licensing on rare earth minerals. Now, it just came out that apparently Commerce Secretary Lutnick said that the deal with China has been inked. I think the market's been sensing this, like this deal is coming together quicker with China, and that's the big tariff shock, right? There was 145% tariffs that were de-escalated to 33%. They may go down a little further from here. That these big tariffs are not going to happen, right? And therefore, also the inflation shock that people were fearing may not be as large. Therefore, the Fed may be able to cut sooner. And all of those reasons are fuel behind this market. In addition to that, we did diffuse the war with Iran really quickly too, right? So there's this other element. So I think it's all sort of coming together like, this leads to a market back at a record high or maybe higher.
Yeah, Ben, talking about the Fed, there is now increased talk about how Donald Trump is toying with the idea of announcing a new successor to Fed Chair Jerome Powell. And with that report, we've seen the US dollar hitting a new fresh 3.5-year low against the euro at least. What is going on here? So what is putting pressure on the dollar?
On the one hand, it's very simple. It is about those rate cuts that, if this Fed chair that people talk about really comes into effect sooner than what people thought, there's going to be more expectations building in our market, in the U.S. market, for rate cuts to start sooner. Because it basically is a story about the Fed may be behind the curve on rate cuts. Right? If these tariffs are not having such an effect on inflation as people thought it would be, or that the Fed thought it would be, the Fed may be behind the curve on rate cuts. Right? So that's one reason why the dollar is weaker. I think the other reason is that as the trade war continues to sort of evolve into not such a big war, and there was today news out that Europe is also working quickly towards a deal with the U.S., tweaking certain things, that I think too is for a region like Europe very much of relief. In addition, that the euro has been strong too because this NATO agreement that they came up with of the spending going up to 5%, a lot of people have been bullish in Europe for that reason. Right? More defense spending in Europe has driven up the DAX to a record high, and other markets are picking up there, so the euro in itself gets strength too. So I think it's both sides of the coin always with the currency. It's the rate cut story in the U.S. and the uncertainty that's disappearing around the trade war with China and the war with Iran against Europe with defense spending and the economy that's going to potentially lift too, because it's the trade war between Europe and the U.S. is easing. So I think that's sort of the combination why you're seeing this fresh 3-year low on the dollar against the euro in particular.
Yeah, a couple of things weighing on the dollar, like putting out among them. You've got the equation involving the Fed. And of course, Fed Chair Jerome Powell has been called Mr. Late by Donald Trump. So we could see a potential replacement being named sometime in September or October, going by the report at least. Something that's also potentially a part to worry about is the strength of the US dollar. So you point out how it's been lingering at 3.5-year lows. What does that mean for earnings coming through, especially from the big companies with exposure overseas?
Yeah, that's actually a good lift there too, as the dollar has been always very favorable to those companies that have earnings overseas. If the dollar is weak, right, that's a very different story than 10 years ago, when with all the speculations, Fed rate hike and dollars really strong, that the market was in good shape because of all those big companies with earnings overseas being hurt by a strong dollar. So that's another underlying factor of why this market is having a boost. But in the end, the dollar weakness also plays another role. You see it in the metals, for example, where a lot of the metal commodities are up because they really typically get a lift from the dollar, except perhaps to an extent in gold, which may be losing a little luster here because, yes, all the uncertainty, trade war and geopolitics and everything is somewhat fading, not entirely, but it's fading. The gold loses a bit of its shine. But other metals are picking up in value because of the dollar weakness.
Yeah, that's a very interesting picture when you talk about gold, which has been outperforming equities for the good past 2 or 3 years. What is the expectations of where you think gold prices will be going forward from here on?
Well, if you think historically, when gold was always outperforming U.S. equities with a substantial margin during periods of geopolitical uncertainty, that once the uncertainty starts to dissipate and fade, gold had a significant drawdown, as we say. Like it could be on average, it could decline by 30 to 40%. That's been historically the case in every one of those episodes, going back from even as recent 2020 to 2011 and earlier. So I do think that is potentially in the works here. Gold has been topping out around $3,400 an ounce or about, and it's been testing that level several times and not broken through there. So if the uncertainty really is fading from here, we don't see much anymore happening with Iran, we don't see much more happening with these tariffs and trade war, then gold has more downside from here. And that could well be the case, So we'll have to watch it, but it will be a big change from the environment we've been in, where gold has just had nothing but a relentless rally.
All right, perhaps an inflection point for gold to watch out for. We've been in conversation with Ben Emons. He's the Chief Investment Officer for FedWatch Advisors, helping us out with the latest in the markets. Ben, always a pleasure chatting with you. Thank you so much for your time and insights.
You're very welcome. Thank you for having us.
All right, catch up with you again soon. Next time, stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.